in a global perspective first and linking to Asia. So basically we are facing a liquidity crisis. I think it's well known and recognized by central banks, regulators, as well as market participants that there is a major issue in the corporate bond markets globally. For example, before the financial crisis, dealers or sell-side dealers were holding inventory of about 4 to 5% of the outstanding bonds, enabling them to take and act as a counterparty, principal counterparty to buy-side investors who wanted to buy and sell, and with the dealers kind of warehousing the risk on the balance sheet for a period. Today, that percentage has gone from 4 to 5% down to less than 0.5%. At the same time, issuance, the number of bonds outstanding in the market, has gone up by 3 to 4 times. So if you combine those two, it's clearly indicating that there's a crisis in liquidity. It's not possible for dealers to act in the same way and present the market in the same way as they used to do before 2008. So I think what we need to look at is that the bond market is enormous. You have more than $87 trillion worth of bonds outstanding, and much bigger than the equity markets. It's more than 250,000, maybe even 300,000 individual bonds. So the number of actual bonds that can be traded is enormous. With what I just mentioned, the dealers being less willing and less able to take balance sheet risk, partly due to business reasons and partly due to regulatory reasons, it creates a major challenge for the whole market globally, as well as in Asia, where the fragmentation is probably even bigger than the US or Europe. So the dealer's job today is they need to help buy side be linked. So dealer wants to link a client A who wants to sell with a client B who wants to buy at the same time. And that is the challenge for the dealers today. In the old days, before financial crisis, it was more about quoting a price and being able to take the risk. Today, it's about utilizing data to find the buyer and the seller in the same bond at the same time and link them together. In general, the systems that market participants are using has developed very little since the financial crisis. People use terminal systems like Thomson Reuters or Bloomberg. They have price information there, they have chat systems and email built into that, and they continue to use that. However, as systems evolve, and with, as you mentioned, social media and other data sources, the amount of data out there is just expanding rapidly. And the challenge for market participants is to sort through all that data, so get rid of the noise and really just look at the data in a contextual context. And I think that is the challenge, and the systems have not really developed generally to adapt to that market, and that is what we do at Algomi. We are addressing that data problem and helping people sort through the data. Well, I think it is really about utilizing the data that they actually have available today within their organizations. Every dealer have multiple different systems that each have many data points. And the challenge is to bring it all together, to present it in front of the decision maker at the right time, when they need it at the right time. I think that is the challenge for most dealers. So most dealers, to facilitate this broker role, linking buyers and sellers, really want to utilize the data to the fullest possible. And for that, they need systems, they need smart systems, intelligent systems that can help them, again, sort through the data, get rid of the noise, and present it in an actionable format to the people who actually talk to the clients.